To me, the bull market really started with the early days of the internet, and it came back after the crash. So for me, it was a great time because we sold our company, and the timing was perfect, but it was irrational. And we knew it was irrational. It was why I could agree to sell my company, was because I knew it would never have a valuation like that again, or it would be a long time. I should never say never. But it was a fabulous time because people were hopeful and people believed these companies would grow that big. We're seeing it again.
You couldn't tell it was a big day that day because the market had been falling and we didn't know it was not going to fall any farther.
The stocks were going down and down and down every day, and people were wondering, when is this going to end? And at some point I was thinking, like, these companies can't go to zero. Like, I was working at CBS. CBS cannot go to zero.
I was a stock analyst 5 years removed from college, and I only knew that stocks went up, never down.
The other thing that was going on, you might remember also, is that President Obama had just been named the president. And the mood of the country was a lot different and hopeful. Obama had said, what you're now seeing is profit and earnings ratios are starting to get to the point where buying stocks is a potentially good deal if you've got a long-term perspective. So Obama really did call the bottom. So banks were rising that day because you know, the bailouts were working, and also Warren Buffett said that day that the economy had fallen off a cliff, but that it would recover.
I mean, it was right on that precipice, and that's when everyone's scared that this whole thing is going to collapse. But you know, you have to have some faith and optimism that this thing that's been around for hundreds of years or however long the stock exchange has been around, is going to continue to exist.
It's never going to be perfectly rational. That there's an emotional quotient to the markets and to people's real belief in businesses and how much they can grow. The market's about what you think the future's going to be, not what you think today is. And a number of things can impact that. It can get irrational. And over again, you look at it and say, this is amazing that this can happen. Maybe it's true this time. Maybe they'll go that big. And there's some moment in time where the bubble bursts. But it still comes back again. It's never permanent. I think we're protected against seeing a 1929 kind of thing again, but even that we recovered from.
Panicking never pays off, pretty much. Always good to have cash at the ready, and you know, like Jim says, pretty much pigs get slaughtered, so don't get greedy.
Stock market is up 300% since that March 2009 low. That's incredible. And if you look at a 100-year chart of the Dow, the recession of 2009 is barely even noticeable. So I think that's an important lesson, that over the long term, stocks go up, and equities are the place to be if you're looking to build wealth over many decades.